Okay, perfect. Before getting into the technicals about the sliding blockchain strategy, let's have a recap about the existing strategy that we're doing right now. So the current strategy works in a way that as the market is going down, the market's going to fluctuate. And as the market's fluctuating, we're going to have covers or orders in the down market that works independently, and each of them is going to make profit. And when a profit is made, 50% of that profit is used to pull down the average price of the top trades. And we'll keep on pulling that average price down and down and down until eventually it closes the cycle. Now, the downside of this is that when you buy a cover or you buy coins on the top of the market and the price goes down, we know that eventually it's going to close it, even if the market doesn't come back again. But if the market goes deeper, your portfolio is going to be going down because you have some orders on the top that were bought at the higher point of the market, and right now the market is down. And as the market is recovering, as your bot is recovering that position and pulling it down, you will still have less value of that position. So I was thinking about, how about if we close that positions on the top before the market goes even deeper? So in this way, we're actually going to save our USDT. We're going to always have more USDT than what we would have if we're moving the average price. So let's get into this and show you exactly how it works. But before that, let me give you the principle as a theoretical way. So in this new strategy, it's called sliding blockchain strategy. Why did I call it sliding blockchain? Because I'm considering the covers, which is initial buy, cover 1, cover 2, cover 3, and so on, as kind of blocks. And they are in chain because they are connected to each other. Each one is after the other. So in the sliding blockchain, what we're going to do, instead of using 50% of the profit to pull down the average price of the top trades, we're going to use that profit to cut the top positions in a way that we're using the profit and adding it to, if we sell the top position at this point of the market, how much are we going to get out? It's definitely going to be less than the amount that we used to buy it. But what if we add that profit, additional profit that we used to use to pull down the average price? Now we add it to that cover and see if we're going to have profit in that point of time. If we're having profit, then we're going to cut it from the top and add another cover. This way, we're not going to be losing high value if the market is going down, because as the market is going down, we're cutting the positions from the top. We're selling the coins that we bought at the top of the market without making loss by using part of the profit that we're making in the down market. And the other benefits of this is that as it cuts position from the top, as it sells the coins on the top, it's going to create one more cover at the bottom of the market. So you're always going to have that, let's assume 38 covers. So you're always going to have that 38 covers. But when you cut on the top, you're going to take that cover and add it to the bottom. So it's 38, but it's moving with the market. As the market is going down, it's going to be moving down. So it's more of a dynamic or automatic MCR. So instead of activating the MCR manually and adding funds from outside, you don't have to do that anymore, because the bot is doing that on its own. As it closes position from the top, it's take the budget for that position and it makes it at the bottom. Let's look at a little bit of more details and look at some numbers here. Let's say this is the market and this is the initial buy, and we have this kind of covers waiting for the market to drop so that it can start trading. Let's say the market did this kind of movement, went down and stayed down for long, which the scenario that we're assuming whenever we're explaining the strategy. So let's also assume that this is just an example, guys. Let's assume that the top position or the initial buy was bought for the amount of 20 USDT or $20. And with that amount, we bought 5 coins and the price of the coin at that point was 4. And our take profit is 3%. So in this kind of market, all the positions are going to be independent positions. There is not going to be average anymore. It's all independent positions. So the market is here and we have the covers, and on the other side, we have the bot brain. How does it work and how they're connected, we're going to see right now. So the bot brain here will have 2 places to work on. We're going to have a virtual temporary wallet for the bot, and the other side is going to be the calculation. The bot's going to be doing the calculation. So let's look at the market movement. As I mentioned, all the covers in this scenario are going to be independent covers, and it's going to be using 50% of the profit to add to this virtual temporary wallet. This is just to show you in a visual way. So let's say, for example, the market is down, the bot is trading, it made a small profit of $1 or 1 USDT, is going to be adding that $1. Actually, let's say $1 is 50% of the profit. So this $1 is going to be added to the virtual temporary wallet. And then the bot is going to be seeing that there is the total of $1 USDT or $1 in this wallet. So it's going to, at the same time, as soon as there is a sell and there is profit, the bot is going to look at the top position, which is in this case, the top cover, which is the initial buy, and start making the math. How is that? It's going to use the same 5 coins and try to multiply it by the current market price. Let's say, for example, the current market price is 3. So 5 multiplied by 3 is 15 USDT or $15. So the bot is going to see, okay, now we spent 20, but we're getting only 15 if we sell it right now with the current price because the market is down. Okay, now the bot is going to look at how much do I have in this temporary wallet, and it's going to add that to the 15 that we got. Sorry. The total amount, 15 plus 1 is 16. Now it's going to compare this amount to the initial amount that we used to buy the initial cover or the top cover. So in this case, it is less than 20 plus 3%. So the 20 plus 3%, the 20 is the amount that we spent, and the 3% is the profit that we're looking for. So as long as it's less than this amount, then it's going to just continue and wait for the next trigger. And the next trigger is when the next profit is made. So let's say another profit is made and 50% of that profit is $5 in this case. It's going to be again adding this $5 or 5 USDT to the temporary wallet. And accordingly, the total amount is going to be increasing to 6 because 5 plus 1 is 6. Then a new calculation is going to start happening in the bot, which is the same as what happened before. So we're going to look at the top cover, which is 5 coins. Let's assume also at this point of time, the market price is 3.2. So 3.2 multiplied by 5 is 16. And now again, the same logic is going to be looking at how much do I have in this temporary bank or temporary wallet. It has 6. When we add the 6 plus whatever we got, if we're selling the coins right now, is going to be 16 plus 6, that is 22. Now, is 22 more than 20 plus 3%? Yes, it is more. That means it's the time for me to do a different kind of action. So in this case, the bot is going to first of all sell the initial buy, because now we know that with the profit that we have made, or with the profit that we have in the temporary bank plus whatever we're getting, if we're selling that position right now and get rid of it, we're going to get more than the amount that we spent plus the take profit parameter, which is 22 in this case. So it's going to sell that position and realize a profit of 2 USDT, a gross profit of 2 USDT. And what is it also going to do is going to move or create a new position below the lowest cover. So use that budget that we got from selling this cover on the top, make another cover. Let's say here just cover 17 as a sake of example, because I'm gonna put like 50 to 100 or let's say 38 covers or 50 covers. So I just made it 16 for the sake of example. So in this case, it's going to add another cover, which is cover 17, and add it below the chain. So it cut from the top, add to the bottom. What else? So in this case, since we have used the 6 USDT or $6 that was in the bank or in the temporary wallet, it's going to empty the wallet and start all over again. And start by using 50% of this gross profit and add it to the wallet, temporary wallet. And repeat the same process now with the top position is not initial cover anymore. It's going to be cover 1. Do the same logic and then cut cover 1 once we have enough money in the temporary wallet plus whatever we're getting from selling that cover. We're going to cut it and then realize the profit and create another cover below the lowest cover. In this case, it's going to be cover 18. I'm going to do that next for cover 2 and then cover 3, cover 4, cover 5, and so on until the cycle has closed completely, and then start all over again. This is simply how it is. As you can see here, it's creating kind of a dynamic MCR. So when it opens a new cycle, then it's going to have again 16 covers, and as the market is going down, it's going to cut the positions on the top and add to the bottom. And right now I'm testing it on a down market with a coin that have dropped more than 80%, so to see how it works. And then the second scenario is going to be with a sideways market. I'm going to cut a portion of the market and then test it on that portion of the market. And next, I'm going to also have it working on the upwards market. I want to make sure that also on the bull market, it's making good profit, not only in the down market. So the benchmark for me is the current strategy that we have. So when I'm testing this one with different parameters, I try to make sure that it at least gives me the same kind of profit that we're making now, even more. In the down market, obviously, because it's going to be working all the time, it's going to be definitely making more. But on the up market, obviously, the current strategy may be making more profit. That's what I'm adjusting right now, just to make sure that in the up market also is making something similar to what we have right now, if not better.